Hello and welcome back to a new video here in the Trading for Everyone YouTube channel. We're going to analyze the gold as an investment in comparison with the USA stock market, the S&P 500. What it means, the S&P 500 is one of the most important index around the world because it measures the behavior of the main 500 stocks in the USA market. And what is the purpose of this video is to analyze if the gold is useful as a measure of like investment idea to protect our portfolio during crisis, during tough times, during inflation times. So we are going to talk about some of these topics. We are going to start with the first one. It is in reality an investment, the gold. Based on Warren Buffett worlds, the gold is not an investment because the gold itself, it doesn't generate future cash flows. The gold is basically an asset that we buy to protect our portfolio during tough times, during inflation times. So in reality, it's not an investment because it doesn't generate future cash flows. So that's one important thing. If we compare gold in comparison with the stock market, we are comparing two different things. And the second point that I pointed out here is 1971. Why that number in particular? Because that was an important date during the history of gold, because the USA Treasury Bank says that they are not going to follow up the gold as a measure in comparison with the cash. So before that date, all the US dollar notes that are around the world has their representative in gold in the bank as a goal. But after that, the Treasury Bank says that they are not going to follow the goal anymore. So after that, a lot of inflation times appears, a lot of crisis appears. So that's the reason why we're going to talk about since 1971. That is the beginning of the chart. In here is in month. So we're going to analyze what happened with the gold since 1979 until now. If you compare using this tool, what was the behavior of the gold during all this time, we can see that the gold itself grew 291% during these 40 years. If we divide 2091 divided by 40, we're going to see that 7% is the average income or the average growth that the gold has during the time. If you compare this growth in comparison with the US S&P 500, we take the 1980s, I draw a line in there until the prices that we are experiencing now, that is says 2,600, because even considering the big drop, we can see that the S&P 500 was a really better investment in comparison with gold, because that generates 2,300%. So if we divide that numbers, 2,355% divided by 40, we can say that the average growth was 58% per year. That's crazy in comparison with the other number that we get it from the gold. So comparing gold against the S&P 500, the S&P 500 was far better investment. But what happened during the tough times? Because what's happening now, we're experiencing a really big drop, a very big crash in the market. The markets go down almost 30%, 32%. Now we are going like we are 18% down, and the gold overall in the same period of time, we can see that the gold is up 3%. So in the current crisis, the gold was a really useful tool to protect our portfolio against volatility or against big drops in our portfolio. What happened the previous one? If you go back to 2008, everyone knows that the market crashed because due to the subprime crisis, so a lot of banks go bankruptcy and the markets fall 53%, the overall market. But what happened in the same time? If you compare the gold in the same period of time go up 18%. So if you compare this behavior against that one, that is a really good idea to know that the gold was useful to protect our portfolio, because we didn't hit this really big drop. In comparison with that, we get an 18% profit. And what happened in the previous one, in the 2000 bubble, when all the technological stocks go down and all the market itself go down as well. So the market go down 45% overall, and the gold in the same period of time go up almost 21% in the same time. So we can see that in the two last biggest drop, the gold was a really useful tool to protect our portfolio. But what happened if we go back, like 1987, like far time ago, when the market crashed in a really small period of time? The market go down 30% in 1987, and if we compare the same period of time in the commodity, we can see that the gold go up 9%. So in all the big crisis, all the big crash that the market has in the last 40 years, the gold was useful to protect our portfolio in that period of time. But we also compare that in the overall trend, the stock market was a better investment in regards to percentage. So in the short term, in the crisis times, the gold is a really useful tool, but in the long term, the S&P 500 is a better investment. What are the different alternatives that we have to invest in gold if we want to invest in gold? There are different ways to invest in gold. The first one is the ETF. The ETF is like a company that consolidate the really huge amount of money and then invest in this commodity in particular. The most famous one is the SHIELD. SHIELD is this one. If you search in the investment search tab, you can see that is the gold shares. But basically, it's an ETF that follows the price of gold. The other way of investing in the gold is through futures or CFDs. This particular thing, for example, if you look in one of the brokers that I'm using myself, if you look at gold, the first one that appears is the CFD that you can trade on this particular broker. But in different brokers, you have different alternatives. Could be futures, could be CFD. You have to take into consideration that this type of investments has a tiny but a constant cost of while you get the investment, because you had to renew the contracts. Like in the future, you had contracts that had to be renewed. So each time you renew the contract, you had to pay a fee. That's the reason why you had to be sure that in the long term, that cost doesn't impact in your investment. And the last one is the physical gold. Is basically buy in a store a piece of gold. There has several problems, that type of investment. First, because then it's difficult to keep it. You have to be sure where your storage in that a really expensive asset. Maybe you have to go to a bank and you have to pay for a specific place to hold the gold, so you have to pay for that also. And also maybe it's really easy to someone scam you, because it's really difficult as an investor to understand if that gold is real gold or fake gold. So and overall, also in the physical gold, you have to pay a lot as a spread. So each time you buy or sell that gold, you have to pay a lot of fees in comparison with ETF or futures or CFD. The physical gold, I don't like it in my own opinion, but each of you, maybe you have different ideas about that, because some people want to have the gold to touch it in a way. So we talk about the different ways you can invest in gold, the overall trend, because what happened if you compare the last 20 years? So if you compare from the beginning of the year 2000 until the end of like nowadays, we can see that the overall increase in the price of gold was 463%. If you compare that period of time in comparison with the S&P 500, so if you go to the year 2000, and if we measure the S&P 500 since the year 2000 until now, we can see that the idea changed a bit, because we can see that the overall market go up 78% in comparison with the gold that go up 463%. So in the last 20 years, the gold was a better investment in comparison with the S&P 500. But that depends a lot which point you pick it, because it's not the same if you pick the time before all the market go down and crash in comparison with this time. So if you compare the time when the crisis finished and the stock market go up again, the percentage increased a lot. So as always, it's not only important to understand what asset we are buying, it's also important to understand when you are buying. So that's important to follow the trends. What else? When we understand we're trying to invest in different type of assets that has like a behavior to protect against crisis, we always think about gold. But another alternatives could be copper or silver, that are also commodities that we can buy through futures, CFDs or ETFs. So when we are going to, maybe in the future, are going to do another videos analyzing the copper or the silver. If you really like this video, you can subscribe to our channel, tick in the bell button, and you are going to receive different pop-up message when we upload new videos. And also, if you really like this video, you can click in the like button, and you can leave a message sharing your experience in regards to gold or different type of assets. What else? What I wanted to say to end this video, well, that's the overall idea. So what we talk about what's the gold as an investment, what happened through the 40 last years, how we can invest in gold, and what's different alternatives we have to invest in this asset. So I will see you in a new next video. So until then, enjoy the week.